Welcome back to the channel. We're going over the SP 500, the Nasdaq 100, no BS, straight to the point. Before we get into that, I have to ask you to consider doing two things. Consider liking and subscribing. But if you don't like and subscribe to this channel, check out my boy, Jay Ream. He's posting videos almost weekly, teaching you guys how to trade. He's my partner. He started his YouTube channel as well. Go give him a view and give him a sub, but tell him Tyler sent you. Let's get to it. So what we're going to talk about is ultimately what happened on the day. Why did we figure we were going to get some of this momentum? Why did we see upside happening? Now, the first thing I want to highlight is something said by the White House. And there was a lot of stuff said by the Fed and the White House today, as you could assume. The White House spokesperson, we are not currently in a recession, but the biggest thing I want to take away from this, or a quote-unquote pre-recession. So you're going to get GDP results tomorrow. This is the big news. This is what we've been waiting for. But into today, what happened? You had Powell speaking. And Powell said a lot. Powell, he said some big stuff on the day. You can go read about this. I'll have a more detailed video or viewpoint most likely in the Facebook group, so feel free to join there. I posted this earlier for NVIDIA, AMD, and Intel. And if you know anything about that 3 hours ago, guess what happened? All these stocks ended up rocketing. Go check it out. Facebook group free down below. But I want to focus on what happened specifically today with this price action. Now, I got kind of a lot of hate yesterday. So we're going back to Twitter. I posted this so everyone could see. We're going to my Twitter specifically, media. Yesterday, around close, right at close actually, calls at close, 395s. Got a lot of hate. People did not like this. Even people in Discord, they were like, Tyler, what are you doing? We're bearish. We're going to be going down. Obviously, you opened up today. You were at 390 at close, 391. You opened up today at 394, ended up running towards 402. What happened? Now, you had your Fed rate hike decision, a 75-point hike. Stay with me because this might get a little bit confusing, but I want to elaborate into why you are so bullish specifically in today. So they decided to stick with the 0.75 hike. Once that happened, right here, you start to see that immediate push up during those Fed minutes. Immediate pushing to 400 from locally 397. Once they closed the meeting, questions were done, you pushed your highs around 403 roughly. The bullish factors here. Powell is saying that they believe CPI has capped off. They believe CPI, your inflation data, has reached highs. You're done from there. We go over to J&K, junk bonds. They went absolutely parabolic and then they kind of went down after, but you went crazy today. So risk on is definitely on the market right now. Now, we have some big stuff happening right now and going into tomorrow that could very much bring you down. So we need to talk about all these factors right now. The Fed is coming out with a very strong note saying that they believe inflation's capped off. They don't need to raise rates as much anymore. They're even saying on their next two rates, they're pricing, and I believe it's 100 BPS between the next two. So that's lowering from a 75 back down to a 50. And if they come out with the next rate hike and it's lower at a 50 BPS, you're very bullish overall. The market's going to take that. Definitely, market will take it if you come out on your next rate hike from a 50 BPS very bullishly. That's why I said yesterday, if you get a 75-point hike today, guess what was going to happen? You were going to go up. That's why I let you know. That's why I'm telling you the truth here. I'm not here to get views, not here to get likes, although I appreciate if you like and subscribe. It helps out so much. But the point of this channel is for investors to come to it and get an unbiased viewpoint and getting an honest view of what's really happening and someone that's going to tell you exactly what they're trading. So looking at this, you're pushing up, but you're coming back into this key range, which we've been talking about, 12.6 locally through 12.9. Very massive resistance. We're always talking about risk to reward here on the channel. Personally, I am not looking for calls in this range. Right here, I don't want them. I'm not interested. As you're waking up, this is where you're going to see sellers start to step back in. Yes, I know the news was bullish. But as we look at some of the news coming out now, this is where things get more and more interesting. If you don't know, what did Facebook just do? Facebook announced some very important news on the market. And I want to talk about specifically why the Facebook news is very big. So I'm going to pull this up very quickly from Discord. In Discord, if you don't know, the new news bot is here as well. So just go to news and it highlights the most important news from Twitter and it ciphers out and sends it here. It'll be right here in the news if you're in Discord. So you came out with this. This was Facebook's first year-over-year decline in revenue. Very important to know there. your first year-over-year decline on Facebook's revenue. Now, we anticipated this to happen because we had COVID and everything happened last year. So obviously, social medias are going to start killing it. And you're not going to just kill it for that long. You have to eventually slow down. Meta right now, you're hurting a little bit. You're down about $4. They missed on revenue and EPS. I anticipate they're going to bleed. They have their earnings call. They'll be making more statements, going over everything. But I believe Facebook should be down in these realms of around 157, 160 flat. It should be down here, no doubt. You should be coming back down to this zone. There's no question Facebook should be getting hurt tomorrow. It is what it is. They're losing money. Their metaverse stuff is doing terrible across the board. They're just not working on the right stuff. They need to be focused on, one, social media, what got them started with Facebook, and they need to be focusing on content creation and content creators. That's where the money is. That's what YouTube's doing. That's what Google's doing. And that's why Google's making money. And that's why Google's going up. That's the first thing there. Facebook is going to move the market. Second thing, Ford. Ford, I have a lot to say about this. Ford reported awesome earnings. Some of the best earnings you might see during this earnings season. And I want to highlight exactly what's going on here. So stay with me. I know this is a little bit of a different video, but I do want you to stay with me. They beat EPS almost by 50%. And then look at their revenue beat. $40 billion for a $34 billion estimate. That's a major, major beat there. Now, Ford should be rocketing. They should be going absolutely parabolic. But what's happening here? Why are you not going crazy? Ford also, $4 billion in headwinds from commodity prices. They also stated some really big things as well regarding things that they're not going to be commenting on. So they've begun cost-cutting efforts, which they're not paying off right now. Not working. They also said $2.4 billion write-down on its Rivian investment. Very important to realize everything that's happening here, that earnings may be coming out, quote-unquote, stronger on something like Ford, but you're definitely seeing what's happening from inflation affecting these companies, and it's not slowing down in that sense. So although Powell and although the Fed and the White House are trying to say inflation's capped off, it's capped off, remember what they said last time. In my opinion, I don't think the downside is done. The last time he said, it looks like the inflation's capping off. It looks like we have the means to handle this. It looks like we're headed uphill. What happened? Inflation beat again. New highest inflation in the past decade. It's been absolutely crazy. So I anticipate more downside will come. However, can you get some possible upside? That's why I want to spend time on the Nasdaq chart, because we need to talk about a longer term viewpoint here. Today is not about day trading. The past few days been day trading. Right now we need to focus on what's really happening on the market. Now, I think this level right here, again, it's a big level, so I know people are going to be like, Tyler, it's a massive level. What are you talking about? 12.6 to 12.9, massive resistance. You are going to struggle in this area. Basically, your previous highs you had right here, but the big thing is, too, it's also your previous lows. Previous highs, previous lows. Big level. So I anticipate you're going to struggle here. SPY. And this is what everyone was probably focused on here. SPY did what we've been waiting for it to do. We've been talking about it here on the channel. You filled your gap. You filled the daily gap that you had back on June 9th, and you came a little bit higher, and now you're there. What did I say yesterday? I said if SPY gets above 396, our bull zone, what's happening? You're going to push up like crazy. And guess what happened? You didn't break the bear zone. You broke the bull zone. Boom. It went crazy. Simple as that. Now, I have some people that are upset with the way that I'm making videos, and they're saying, Tyler, you're showing us both narratives, that you can't be a bull and a bear. Look, people, very, very simple. Even if you did not grab the calls with me at the end of the day when I posted them on Twitter and posted them in Discord, even if you did not get in, hypothetically, you did not get in right here, where was the next play? You broke above, you retested like we mentioned, and you shot up to the moon. You still had an opportunity during trading hours to get in at this time right here. You still had the opportunity. You still could have made a killing. The same thing would have happened if you broke below the bear zone. You retest and you go down. That's the play, people. That is the play. Now, if you come back down here, you're always playing for the bounce to the upside. If you come here, you're playing for the bounce to the downside on your initial touch. But as of right now, I'm giving you the opportunities. I'm giving you the setups no matter what. People are always asking me, Tyler, you're saying what's happening, but it's in the after hours. What do I do? You're trading the retest. I never trade the first test usually. I never do unless I know something that's going to be happening. Like yesterday, I figured very high possibility you were going to shoot up today, and you did. That's why I set these things up like I do when I'm going over these tradings and these opportunities for you. That's the big thing here. I want to talk about VIX. Another reason why I do think upside is limited is based on where VIX is at. Let's talk about this. We've been talking about VIX for quite a while. And again, this is a longer term viewpoint right now. This is not, for the end of the week. This is a longer term viewpoint. You're coming back down and you're below the $24 level. I want to highlight that. You're sitting in this level now. This was our key area where you were bouncing to the upside. But I have to look at this. As the VIX comes down, the market goes up. But as you get closer and closer to these lows, you have to anticipate a bounce on VIX. And when VIX bounces, what happens? Bears start to dominate. You start to get a push back down in the market. So the further you come down on VIX, the higher and the bigger the move can be, most likely, and the more volatile it can be towards that downside push. Key things I'm watching to keep me updated. One, obviously, going to be junk bonds. You're at a big area here. If you start to break above these highs, you have about 95, 95.6. You have upside potential to 97, 98. Junk bonds will definitely lead the market. They're one of the biggest indicators here. Going to DXY, you're also seeing DXY hurting on the day, still holding at that support that we mentioned here. DXY is also going to show you the relative strength and risk on. What does risk on mean? Investors taking more risk on the market, dumping more money into tech and some of the riskier assets on the market, such as Facebook, the big six, things like that. The big stocks we're always talking about, taking riskier options, riskier trades, pushing the market a little bit more violently. That's why you got to be paying attention to these things. Meta, again, I think this is the biggest thing going into tomorrow. It's going to help or push the market down. Meta's already dropping since I've been making this video, since just early when I mentioned it. I think Meta is going to open up very low and very, very weak. Meta downside is definitely going to be the move for trading tomorrow, in my opinion. That's what I'd be looking at if you want to trade anything. Trade Meta to the downside, especially if it breaks the lows. So looking at this, Meta opens up very weak. GDP tomorrow, GDP early in the morning, right at open. That comes out negative. Meta comes out negative. It's looking like a very weak day on the market, but you do have big earnings tomorrow as well in the after hours, Apple and Amazon. We'll talk about those later. I'm looking at specifically here on the market, going over to ES futures. This is SPY, the S&P futures. You're at a big level once again, and you're getting rejected as we speak. So again, I'm not saying that tomorrow you necessarily have to have downside, but what I am saying is I've been pretty bullish and I've seen the room for upside over the past week. Now is the time to start preparing yourself for the potential downside that most likely will be coming over the next week, week and a half. I am personally preparing and I'm getting ready for more downside and turbulence and setting myself up for areas to push to the downside. Now, where do things change? Let's say, where's the point that makes us full bullish, in my opinion? If you break above 13,000 on Nasdaq, I think you enter the realm of very bullish. You'll start pushing to 13.6, possibly pushing back up to 14.2 if you can get above 13,000. Now it's 400 points roughly of upside, but I want to mention how quickly this can happen. Today alone, just so you know, go look the statistic up. Today, this was the biggest move you've had on the Nasdaq in 2 years since the 2020 crash. This is the biggest move to the upside that you've had. Over 550 points, I do believe, on this move today, or 490, I believe, was the move that you had on these indexes. So make sure you're paying attention to what's happening. If you take anything from this video, it's not to short everything. It's not to go long. It's not to play meta to the downside. It is to prepare yourself for the downside potential. I do not believe we have found a bottom as far as inflation goes. I don't think it's reached the top. I don't believe the markets has found a bottom either. I think we're preparing for more downside. I think our government is absolutely oblivious, and I've been trading to the upside to make money on the market. But right now, as we look at the Fed, as we look at everything being said, you need to take a step back and realize what is really going on. And I believe we are setting up for a nasty, nasty downside correction once again. That's my personal opinion. Where that thesis will change is if you break above 12.9 and 13,000 on the Nasdaq. Until then, I am a bear, and that is the way I will stay until something crazy happens. The only reason other than breaking above 13,000 that I become a bull is if GDP tomorrow comes out in a very positive outlook. I'll keep you updated on the Facebook group and the Twitter group. If you're interested in joining the Discord, what do you need to do? The link is down below. Tap in, join now. Every single day we're live. We are telling you exactly what we're trading and how we are looking at the market. Have a good one, traders.